Welcome to Celebrity Investing, your go-to source for insights, tips and updates on navigating the exciting landscape of personal and global finance. Please like, share and subscribe for more exclusive content. This is part 1 of Vintage Cars, a timeless investment opportunity. Thinking about putting your money into a classic car? You're not alone. Many see vintage cars not just as beautiful machines, but as smart investments. The right car can be a goldmine, offering both financial returns and the joy of ownership. In this video, we'll dive into why vintage cars are gaining traction as investment opportunities and what you need to know to get started. If you've ever wondered whether a classic car could be your next great asset, keep reading. Understanding classic automobile investments. Investing in vintage cars can be an intriguing venture, blending passion for automotive history with the potential for financial gain. Let's delve into what makes classic automobile investments a unique asset class that attracts enthusiasts and investors alike. Defining vintage cars as investments. Vintage cars are not merely modes of transportation, but also symbols of craftsmanship and nostalgia. As investments, they hold the allure of appreciating in value over time, making them a tangible asset with potential for significant returns. The appeal of owning a piece of automotive history adds an emotional component to classic car investments, transcending traditional financial assets. Historical performance of vintage cars. The historical performance of vintage cars as investments has shown both stability and considerable growth. While traditional financial markets may experience fluctuations, classic cars have demonstrated resilience and steady appreciation, making them a compelling option for diversifying investment portfolios. Understanding the historical trends and market dynamics can provide valuable insights for prospective classic car investors. Factors influencing classic car values. Several factors influence the values of classic cars, including rarity, historical significance, condition, provenance, and market demand. Rarity plays a pivotal role in determining the value of a vintage car, with limited production numbers often translating to higher prices. The historical significance and provenance of a vehicle can also impact its desirability and value among collectors and enthusiasts. Additionally, the overall condition of a classic car, including authenticity and maintenance history, can significantly influence its market value. Keeping abreast of market trends and understanding the factors that drive classic car values is essential for making informed investment decisions. Investing in classic automobiles offers a unique opportunity to blend passion with financial potential, creating a dynamic investment avenue for those captivated by automotive history. By understanding the defining characteristics, historical performance, and key factors influencing classic car values, investors can navigate this distinct asset class with confidence and insight. Benefits of investing in vintage cars. Investing in vintage cars offers a unique opportunity for individuals looking to diversify their investment portfolios. Let's delve into 3 key benefits that vintage car investments can offer. Tangible asset with intrinsic value. Vintage cars are tangible assets that hold intrinsic value beyond just their monetary worth. Unlike stocks or cryptocurrencies, you can physically enjoy and showcase your vintage car as it appreciates in value over time. The joy of owning a piece of history that you can touch and feel adds a dimension of satisfaction that goes beyond traditional investments. Potential for high returns. Vintage cars have shown a track record of delivering high returns on investment for collectors and enthusiasts. As the rarity of certain models increases and the demand for classic automobiles grows, the value of well-maintained vintage cars tends to appreciate significantly. With the right research and selection, investing in vintage cars has the potential to generate substantial profits in the long run. Diversification in investment portfolio. Including vintage cars in your investment portfolio can provide diversification benefits, lowering overall risk exposure. Vintage cars often have a low correlation with traditional asset classes like stocks and bonds, making them a valuable addition for spreading risk. As the classic car market operates somewhat independently of broader economic trends, vintage cars can act as a hedge against market volatility. In summary, investing in vintage cars offers not only the potential for lucrative returns, but also the enjoyment of owning a piece of automotive history. With their tangible nature, potential for high profitability, and ability to diversify an investment portfolio, vintage cars stand out as a compelling asset class for investors seeking both financial gain and passion-driven investments. Risks associated with classic automobile investments. Investing in classic automobiles can be an exciting venture, but it comes with its own set of risks that investors should be aware of. Let's explore some of the key risks associated with classic automobile investments. Market volatility and cyclical nature. Classic automobile investments are subject to market volatility, much like any other investment asset. The value of classic cars can fluctuate based on various factors such as economic conditions, consumer demand, and market trends. Understanding the cyclical nature of the classic car market is crucial for investors to make informed decisions and mitigate risks. Costs of maintenance and storage. One of the significant risks of investing in classic automobiles is the substantial costs associated with maintenance and storage. Classic cars require specialized care and maintenance to preserve their value over time. From regular servicing to storage facilities, these ongoing costs can add up and impact the overall profitability of the investment. Limited market liquidity. Unlike more traditional investment assets, classic automobiles have limited market liquidity. Selling a classic car can be a time-consuming process, as finding the right buyer willing to pay the desired price may take a while. This lack of liquidity can pose a risk to investors who may need to liquidate their assets quickly in case of unforeseen circumstances. Navigating these risks in the classic automobile investment market requires careful consideration and due diligence. Investors should be prepared to manage these challenges to maximize their returns and mitigate potential losses. Investing in vintage cars offers a thrilling blend of nostalgia, craftsmanship, and financial opportunity. From classic Ferraris to iconic Mustangs, vintage automobiles hold a special place in the hearts of enthusiasts and collectors alike. But beyond their aesthetic appeal, vintage cars also represent a tangible asset class with the potential for significant returns. Once you've built a foundational knowledge, start exploring the market by attending classic car shows, auctions, and collector events. Take the time to network with fellow enthusiasts and industry experts who can offer valuable insights and guidance. Consider joining vintage car clubs or online forums where you can connect with like-minded individuals and share experiences and information. When it comes to purchasing vintage cars, quality is paramount. Look for vehicles that have been well maintained, preferably with documented service records and a clean ownership history. Pay attention to details such as originality, authenticity, and matching numbers, as these factors can significantly affect a car's value. Storage is another crucial aspect of vintage car ownership. Invest in a secure, climate-controlled garage or storage facility to protect your vehicles from the elements and potential theft or vandalism. Proper storage not only preserves the condition of your cars, but also maintains their value over time. Diversification is key to building a robust vintage car portfolio. Spread your investments across different makes, models, and eras to mitigate risk and maximize returns. Consider diversifying geographically as well, as vintage car markets can vary significantly depending on location and demand. Like any investment, vintage cars require careful management and maintenance. Regular servicing and upkeep are essential to preserving the value and condition of your vehicles. Work with reputable mechanics and restoration specialists who have experience working with vintage cars and can ensure that your investments remain in top-notch condition. Market research and due diligence are critical aspects of vintage car investing. Stay informed about industry trends, market dynamics, and collector preferences to make informed decisions about buying, selling, or holding on to your vehicles. Monitor auction results, track sales trends, and consult with industry experts to stay ahead of the curve. Patience is a virtue when it comes to vintage car investing. Unlike more liquid assets, vintage cars often require a longer holding period to realize significant returns. Be prepared to hold onto your vehicles for years, if not decades, and resist the temptation to sell impulsively during market downturns. In conclusion, investing in vintage cars offers a unique opportunity to combine passion with profit. By educating yourself, diversifying your portfolio, and staying informed about market trends, you can unlock the potential of this timeless asset class. Stay tuned for part 2 and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.